Sonal, let's be real, interest rates have come down, and they've come down, some would argue that slightly more than what the general consensus estimate was. Yet transmission is not happening, yet credit offtake has not picked up. So the key assumption which everyone had or has, that interest rates will come down and economic activity will pick up, that very basic assumption has got challenged.
I mean, that's true. So there are two aspects here. One is, why transmission hasn't happened, and second is why, economic growth hasn't picked up. And the two are partly linked, partly there are other factors at work. Other factors at work, and I mean particularly global factors. If you look at a simple correlation between domestic investment cycle and global growth over the last 20 years, the correlation is as high as 0.8, 0.9. So I think, this idea of decoupling is just a sham. I think that's been one of the key reasons why things have been weaker than expected. But on your question of transmission, I think two things have happened. One is that while the Reserve Bank has been cutting interest rates, liquidity and at least, sort of the daily liquidity requirements of the banking system actually have been quite high. And the Reserve Bank has been supplying that liquidity through its overnight window, term repo window. But the total, on a daily basis, for instance, 2-3 days back, banks were borrowing almost 2.5 lakh crores. And therefore, from banks' perspective, the cost of borrowing because of tighter liquidity did not really come down as much. And obviously they had also taken very high cost deposits in the last 2-3 years, which is going to take time to really bring down the average cost of capital. So I think that's been one important reason why transmission hasn't happened. Small savings rate has also been blamed, but I don't think that's a very big reason. But I think tighter liquidity is one of the big factors.
What is your basic assumption for a rate cut in FY17?
Well, we do have, the RBI policy next Tuesday, and since the government did surprise us with 3.5 on the fiscal front, we think the Reserve Bank will follow through with a 25 basis point rate cut. Now, the thing is that we have to look at 6.5% repo rate from where we are coming down, which is, from 8 to 6.5. We have now seen 150 basis point rate cut. And in the last 12 to 18 months, while interest rates have come down, if you look at core inflation in India, actually it's been fairly sticky at 520, 540. And there are multiple reasons for that. I won't go into that. So, but I think the fact that, domestic inflation in services been quite sticky at a time where certain global factors are turning on the other side, particularly commodities, would suggest that we are getting closer to the fag end of the cutting cycle. I think the big focus now from central bank perspective is going to be more how to ensure greater transmission of what has already been delivered, whether it's through the marginal cost lending rate mechanism or better liquidity provision, but transmission is really going to be the big focus now.